Podcast Network Asia.
You are listening to FirstMetroSecurities Philippine Stock Market Weekly podcast, where we feature timely and relevant discussions on the Philippine stock market and the economy in the hope of providing you investing and trading guidance. Here's your host.
Hi investors, this is Anjz from FirstMetroSecurities. In this episode of Market Bites, let me share with you our latest company update on SM Prime Holdings or SMPH. We are reiterating our buy call on SMPH with target price raised to 32 pesos. This implies 13.9 times PE on FY25F earnings and 12.9 times PE on FY26F earnings, which takes into account a D rating and valuations at near -1 SD of historical mean of 23.7 times. As mentioned in our last update, the malls are on sale. SMPH remains unduly discounted in the context of its dominant market share and best-in-class operating metrics in the mall segment, the lone bright spot in the Philippine property sector. SMPH is our top pick among developers for the following reasons. First, SMPH enjoys high visibility and investor access as the largest ASEAN stock in the MSCI EM Real Estate Index at 3% weight, 10th largest EM property name, and a major component of the MSCI PH Standard Index at 10.7% and PSEI at 6.8%. Second, with 74% of FY24 and 81% of 1Q25 EBITDA from recurring sources, your malls and offices, SMPH offers strong earnings visibility and consistent cash flow, which are crucial amid current residential market weakness. In addition, this allows for ample interest coverage ratio at 4.9 times as of end of 1Q25. And third, recent move into the high-end market via the Signature Series under SM Residences allows SMPH to position in the premium segment, though launches or launch timelines have yet to be disclosed. On potential catalysts, investor concerns surrounding residential oversupply, office vacancies, and reclamation costs are valid and factored into our forecasts, while any positive developments such as faster inventory absorption, better than expected execution of premium residential offerings, office demand recovery, and or faster progress in Pasay reclamation project could unlock substantial upside. However, some key risks to our call include: first, weakness in residential segment exacerbates and leads to decline in property prices. Second, demand destruction resulting in weaker than expected consumer spending affecting malls. And third, the fallout from POGO exodus, greater adoption of hybrid work setups, and artificial intelligence resulting to prolonged period of higher office vacancies and rental pressures. Again, that's a buy call for SMPH at 32 pesos target price. And that's it for today's podcast. Make sure to follow us on our socials for more updates. That's First Metro Securities for both our Facebook, Instagram, and YouTube channels, and FirstMetroSec on TikTok. Thanks for tuning in. Hope this has been helpful.
Thanks for listening to FirstMetroSecurities Philippine Stock Market Weekly podcast. Don't forget to follow us to get first dibs on our new episodes. For more up-to-date market news and info, exclusive content, and the opportunity to connect with your fellow Filipino investors and traders, join facebook.com/groups/FirstMetroSec and be part of the FirstMetroSec family.
The views and opinions expressed by the podcast creators, hosts, and guests do not necessarily reflect the official policy and position of Podcast Network Asia, the hosts of the program, or other programs of the network. Any content provided by the people on the podcast are of their own opinion and are not intended to malign any religion, ethnic group, club, organization, company, individual, or anyone or anything.